Larry, thanks for being with us. Always a pleasure, sir. Let's start
Morning,
with the
Stu.
stimulus plan.
Yes.
We're all over the place this morning. We're getting really confusing signals. Can you tell us the right status of the negotiations right now?
Yeah, I can tell you what's up to date here at the White House. The president has just recently met with Chief of Staff Mark Meadows and Treasury Secretary Steven Mnuchin. Mr. Mnuchin expects to be speaking with Speaker Pelosi shortly this afternoon. The president has approved a revised package. He has approved a revised package. He would like to do a deal.
That's fascinating. A revised package. He wants to do a deal. Do you have any
Yes.
idea on what that package would include? Is it broad-based?
It will be relatively broad-based, but I can't go through details, Stuart. That's going to be hashed out in the discussions. But again, let me repeat, in a very recent meeting in the Oval with Mark Meadows and Steve Mnuchin, the president approved the package. It's a revised package. Mnuchin will be talking, Treasury Secretary Mnuchin will be talking to Ms. Pelosi this afternoon, and the president has said, I would like to do a deal.
You just moved the market, as you probably knew you would. We were up 130 literally 20 seconds ago. Now we're up 140, going up from there.
Whether it be before this U.S. election or in perhaps the turbulent months that follow, one way or another, more infinite QE and stimulus are coming to further ramp silver and gold prices. To begin this week, let's take a look at that second headline illustrated here, which states, "The Dow is now positive for 2020. Well, if you foolishly denominate the Dow in nominal fiat Fed notes, it is. But if measured by supreme money, thus far in this year 2020 and likely worsening this decade unfolding, gold bullion has and further stands to outperform the Dow. You can see since the start of this year 2020, this important ratio has fallen from just below 20 to now just below 15. And we expect to see this QE-fueled debt cat equity rollover to fall below its old 2011 low, below 5 ounces of gold bullion, eventually to buy the Dow. In the coming next commodity bull market, it's even possible we go back towards the old sub 2 ounce level, breached also for a few years in time back in the early 1980s. Hello there, this is James Anderson on behalf of SDBullion.com. Do me a favor before we run through this past week's important related bullion news. Scroll down and smash that like button so we can hack this platform's algorithm. Kind of like Larry Kudlow just did, stimulating and pumping the stock market's algorithmic trading bots this morning on Fox News. Before we get deep into bullion-specific news, a few quick reminders that the U.S. consumer, which accounts for about 70% of the economy, is still nowhere near spending what they did pre-viral crisis. Here's total job posting data, and it shows a consolidation ranging from -10 to -20% less opportunities than typically we had pre-viral crisis. Today, bond trading billionaire and raging silver bull Scott Menard tweeted the part of playing Captain Obvious by stating, "Without fiscal stimulus, personal income will fall, layoffs will mount, consumers will pull back on spending, and more small businesses will fail." And now you are looking at a chart which shows the small business revenue on average is off more than -20% or worse since the pre-viral crisis era. You can see that the trend has been consistently sideways terrible for well over 3 months now, illustrating that this is the new semi-viral lockdown norm for American small business revenues. Remember too, the vast majority of jobs in the USA are created by small businesses. So yes, more stimulus and infinite QE cometh. The only question is how and when exactly. Turning briefly to a topic we've covered before here on this SD Bullion YouTube channel, not coincidentally, on March 23rd, 2020, a bill S.3571 was introduced in the Senate of the United States of America. If passed into law, as it is written right now, it would require all Federal Reserve member banks no later than January 1st, 2021 to have and make digital wallets available to all residents and citizens of the USA. These would be branded and called Fed accounts, maintained by the private Federal Reserve Bank on behalf of the USA. Again, the bill's called S.3571. I'll leave a link in the show notes below if you would like to read further in detail. A system such as Fed accounts would likely be a universal basic income model with free monthly money to ensure massive adoption. More than likely, it would simply be more fiat currency issuance, but this time, in essence, directly from the Fed's burr machine to consumers' Fed account wallets. Directly. Maybe this is not exactly how central bank digital currency FedCoin is going to come about, but this bill will give you an idea of how and what they are planning. The U.S. Mint, a subordinate bureau of the Department of the U.S. Treasury, responsible for producing circulating fiat and cupro-nickel currency for the United States of America, is also responsible in producing gold and silver bullion coinage in quantities Treasury head Steve Mnuchin deems reasonable. The most popular and often purchased of which is the American gold and silver eagle bullion coins shown here. The U.S. Mint made headlines this week by announcing a dramatic price increase for numismatic, proof, and collector precious metal products it retails directly to the buying public off its own website. Here are updated prices, effective immediately on their website. 67 fiat Fed notes for an American Eagle 1-ounce uncirculated coin surely sounds like a ripoff right about now. But I've been expecting a day in the future to come where that currently inflated price will sound like a deal too good to be true. The main takeaway with this news is we in the bullion industry should also expect U.S. Mint seigniorage fees to increase in the coming year, 2021. Prices for these bullion coins are likely to remain widely diverged from spot price ongoing. Once the silver spot price eventually clears its old fiat 50 nominal price high, a run to say 67 an ounce will likely follow quickly. Even older American silver eagle coins will be commanding bid price premiums at say $8 to $10 or more over the then silver spot price. This illustration, published on Visual Capitalist's website this week, illustrates how much fiat Federal Reserve note currency creation the U.S. has engaged in thus far in the year 2020 versus how much in gold and silver bullion the U.S. Mint has issued in comparison. Through September 2020, the value of the new U.S. currency supply created was 2,100 times larger than the value of the new gold bullion coins minted by the U.S. Mint. We'll point it out again. These record gold bullion imports into the USA thus far in 2020 are likely a result of high net worth investors and family offices freaking out and going long physical gold bullion. Tweet of the week goes to Danielle Lacal, who states, more than 700 metric tons of gold, or just over 22.5 million troy ounces, have been added to vaults around New York this year. The most in records going back to 1993. Why now? Why so much? Look at the balance sheet of the central banks soaring to 21 trillion and the global monetary insanity for the answer. Speaking about New York City and painful phony recoveries ongoing, here's a quick look at daily turnstile entries for the New York subway system. Those levels are still below typically historically low Christmas and Thanksgiving levels. When do you think New York will be getting its fiat Federal Reserve note bailout? Interesting retail bullion buyer news. Costco has made headlines this week as it begins to sell gold bullion bars on its retail floors in the United Kingdom. Here's a quick snapshot I ripped off Twitter for you to get an idea. Of course, unlike fine silver bullion, 3/9 fine gold is VAT free in the UK. Someone also on Twitter reminded me that Costco has been selling gold bullion bars in Taiwan now for some time. Also of note, Taiwan does have VAT on silver bullion. Not really coincidence. And this trend is not only going to grow in terms of gold being sold in big box stores, but I also suggest it's going to come for silver bullion too. And here is a current unfolding illustration as to why, to close this week's update. This is just over a 20-year illustration of the fiat Federal Reserve note versus the fiat Turkish lira currency. As you can see, prior to the year 2001, 1 Turkish lira could buy you more than 1 so-called US dollar. Now it officially takes almost 8 Turkish lira to buy 1 US dollar, and likely for average Turks the real exchange rate is much higher than even that. The Turkish people have a multi-millennia heritage of stacking physical gold and silver as long-term stores of value, a tradition that likely stems from their abundant wealth via trade routes following the collapse of the Roman Empire with their Byzantine Empire. Turks often buy and own high-purity grade gold jewelry as a means to hedge against risks like their fiat currency devaluing sharply, as it is right now. They are a consistent importer and refiner of physical gold. But too, and in reference to my point just a minute ago about poor man's gold playing catch-up and eventually also showing up on retail trading floors, here's a chart showing record physical silver import inflows into Turkey this past month. Look to the far right bar explosion on this chart to see what I mean. I personally am looking forward to when India does similar bidding for physical silver in lots so large the world will have difficulty in delivering. But for now, those Turks who bought silver prior have also protected and likely enhanced their local purchasing power too. Hopefully, during this current spot price consolidation in fiat Fed note terms, and before the next stimulus and infinite QE round runs rampant, you will have prudently added or secured your position in the precious metals complex for the ride to come. The current rampant devaluation of the fiat Turkish lira versus gold or silver is coming to every nation around the world because every fiat currency is going to eventually also bow to historic monetary metals, gold and silver. That's all for this week. Thanks for coming by. As always, take great care of yourselves and those that you love.
If you enjoyed this content, be sure to give our video a thumbs up. To keep getting bullion-related news and industry insights, be sure to subscribe to our channel. Finally, hit that alert button so you know when we publish fresh content. Give us your thoughts in the comments below. Let us know what you think and which topics you want to hear more about.